Yesterday was the NY ball drop for monetary policy heads. The Fed slashed interest rates by 1/4 percentage point in its first rate cut since last year. Most wonks expected a rate reduction after recent government data showed the economy added only 22,000 jobs last month, indicating that it's likely in need of a jumpstart. But everyone's eyes and ears were trained on Jerome Powell's speech and the Fed's projections of its plans, which suggested that central bankers expect 2 more rate cuts before the end of the year. The big reprioritization. The central bank signaled that it has shifted its focus toward being more concerned with an anemic job market than inflation, even as it remains above the Fed's 2% annual target. Who's celebrating? The rate slashing will translate to lower borrowing costs for small businesses and credit card users. Expectations of future rate cuts could also push down mortgage rates, which have already been falling in recent weeks. Wall Street rejoiced at the prospect of cheaper money. The Dow rose almost 0.6% yesterday, and while the S&P 500 dipped slightly, most stocks within the index were up. The Fed has more on its mind than rates. The meeting of Fed leaders where they voted for the interest rate move was probably more awkward than Thanksgiving dinner amid a divorce, as the White House applies unprecedented pressure on the independent central bank. It came 2 days after a federal appeals court ruled that President Trump couldn't unseat Fed Governor Lisa Cook before the meeting as courts weigh her challenge to her firing. And it marked the first day on the job for White House chief economist Stephen Miron, a Trump-appointed interim Fed governor whom the Senate confirmed on Monday. He cast the only vote against the 0.25% rate reduction, favoring a 0.5% cut instead. But that still probably wouldn't have been enough for Trump, who previously said the current interest rate is at least 3% too high. Looking ahead, though Fed leaders were mostly united in yesterday's decision, the plot of their individual predictions for future rates showed there's less consensus about future cuts.